Good morning, good afternoon to you Londoners, and good evening to the rest of the world. Welcome, it's May 22nd, Monday morning, and we are on day 9 of our 10K to $2 million funding challenge. We're here every Monday through Friday, and I'm documenting the entire process wherein I show you how you can take a 10K account, get funded, and use those funds to keep snowballing accounts until you reach $2 million in funding. I'm using a prop firm called Bespoke Funding. I am not affiliated with them. I am not sponsored by them, but that's who we're using because they offer $2 million in maximum funding for their two-step challenges. So super excited that we were able to knock out phase 1 last week, and we actually got the clock ticking on phase 2. Bespoke Funding has no time limits for you to reach the profit target, so you can take as long as you want, but they do have a 3-day minimum trading rule, meaning you have to place a trade on 3 days. You can't pass it on one day and then get your credentials for the next one or your funding for the next. You have to take 3 days of trades. So I've already put in my first 2 micro lot trades there for Bespoke Funding. So that's cool. We're sitting at $10,000 and like 2 cents or something like that on those micro lots. And yeah, so here we are. We're coming into the end of May. The last full week of May is this week, and so we've got some red folder news this week, which we'll take a look at here in a minute. And we'll see if we can get this challenge rolling and get this funding completely done, maybe this week. So just to recap, if you're watching this video, you just jumped in right here. The way that I trade, my personal rules. So we have to reach 5% profit target on phase 2. I risk 2% per trade. And I do that because I'm only looking for my A+ setups. I'm not looking to come in and just take any trade that I want, or the first thing that I think might be a setup, or I sit down and I want to click buy and sell so fast. I'm only looking for A+ setups. And so to get those, we have to be patient and we have to wait. That's what Venator trading is all about. Venator is Latin for hunter. And that's what I feel like I'm doing every time I sit down, is I'm walking into the woods of the market and I want to take down a trophy buck. And to do that, I've got to be quiet, I've got to be patient, I've got to stalk, I've got to look for the clues of where they are, where they bed, where they eat, where they drink. And then I'm going to put myself in the best position so that when they appear, I can take them down. And that means every day that I walk into the woods to find it, I'm not going to see it. But one day a week or 2 days a week, I will see it and I'm going to be ready to pounce. So I'm not looking to take a bunch of trades. I only want to put my capital at risk on a high probability setup. Why would you want to do anything less? And for your probabilities to work out, for your edge to work out, you have to take every A+ setup that you find, and you have to have your risk management be such that you can capitalize on those probabilities. So you can't risk 0.5% on one trade and then 1% on the next and then 2% on the next and then 0.25% on the next. Your risk management, your risk percentage needs to stay at a stable level so that your probabilities can play out. I know historically my data says I'm just over a 50% win rate. And I go for a strict 1 to 2, actually a little bit more than 1 to 2, just so I can cover a true 1 to 2 to cover commissions and spread and such. And so it's like, it works out to be like 1 to 2.2, something around there, 2.1, something like that. And that's what I go for every single time. And I know that just over half of the amount of those setups that I take, if I'm disciplined and I only take those A+ setups, just over half the time I'm going to win. So, for example, this challenge, I have unlimited time to pass phase 2, to earn 5% on a demo account. This is not even real money. This is a demo account that they're testing me on to see if I can manage risk and I have a good trading system. This isn't even real money. It's not a real account. I'm not in the market. All of these challenges that you're taking on these prop firms, they're not real money. It's just paper trading. It's just paper trading with the element of you have to manage your drawdown. That's the main difference between paper trading with a prop firm paying money to take a test with a prop firm versus you just getting on TradingView right here and open a paper trading account and doing the same thing on your own. Now it feels a little bit more real because you know that if you pass, you can get funded, and then there is real money at stake that you can use to pay bills or live on or whatever, versus just a paper trading account that you do on TradingView. There's never going to be any real profit there unless you come into 10 or 20, 30, $40,000 and you can fund your own account and start growing it from there. Most of us are never going to have that kind of extra money that they're okay with losing by putting it at risk inside the marketplace. So we're here and we're watching. Mondays for me are often just observant. Very often I want to know what the market is going to carve out on Monday and potentially leave a clue for the rest of the week. That doesn't mean that I don't have a bias. It doesn't mean that if I see an A+ setup, I'm not going to take it. I will. But historically, I just don't have numbers on Monday. I have very few trades taken on a Monday. And often the trades that I take on Mondays are probably a little bit less than 50% win rate of my overall strategy. So if I can identify that weakness, then I know going in, I'm less inclined to take a trade on Monday. But again, if we see a primo setup, if I see a beautiful grab of liquidity and I see a structure shift and I see a breaker block with a fair value gap inside of it and it gives me an easy 1 to 2, then I will definitely take it down. So I am a little bit tired this morning. I had to pick up my son and daughter-in-law at the airport. Actually had to take their dogs to them at the airport because they had been at her side of the family had a wedding going on somewhere in Utah or somewhere, and so they had to they were there throughout the weekend and they were coming in back late. Of course, flight problems, whatever. Anyway, the airport here in Houston is about an hour's drive from where I live in the Houston area. And so by the time I ended up getting home last night, and getting in bed, it was almost midnight, and that is late for me. I need 7 to 8 hours of good sleep, and I've got to get up an hour before this to wake up and get my head clear. So I'm running on less than optimum sleep level from last night. Another reason why I'm less lenient, I'm less likely to take a trade today, is just because I can tell I'm tired, and I can tell that my brain just isn't functioning at its highest level. Now maybe I wake up a little bit more here as we go on in the morning, but right now I feel a little draggy. So it's 10 after 7 in New York. We're into the ICT London kill zone for Forex pairs. But we're going to start, and we're going to look at the dollar, and we're going to see if we can get a feel for anything in particular about our bias. So let's just walk back through on our higher time frame here on the dollar. We are inside of this dealing range on the weekly time frame. So our last swing high, our last swing low, and now we're pulling back up. We took out and went through every objective we had last week of this weekly fair value gap, and there is some buy side liquidity that we ran up to. Oops, sorry. So back on the weekly here, we've reached into an OTE from this swing low to this swing high. Well, actually we haven't yet, which is another reason I'm still slightly bullish on the dollar. You have another weekly fair value gap up here, and you have a weekly order block sitting up here. So those align with your optimal trade entry pullbacks. So again, here's the weekly fair value gap sitting up here. You have a weekly order block up here. You have a fair value gap in between the low of this candle and the high of this candle. There is a small imbalance. And now when we drop down to the daily time frame, we'll leave that OT up there, and I'll show you why we're heading that way. I think still you've had this big leg down. You've had making lower lows and lower highs on the daily time frame. You grabbed liquidity. You did get below those lows. You did dip into them. You had 3 drives down into this monthly. You had consolidation. You've now had a change of structure. We've had displacement up. We've made a higher high and a higher low. We reached back into this imbalance, and we immediately had displacement again higher, creating a new leg up on the daily time frame. Higher high, higher low, higher high. Where might this higher low form if we're going to continue to go up into this imbalance here, which is in line with the weekly imbalance on the OTE, and dig into this order block? Well, you do have that volume imbalance here on the daily right here that I would be interested to see. Does it want to get that far down? I don't know that it wants to, based on lower time frame. You have an imbalance below it, and you have a daily order block. So it could come all the way back down to this order block. And if you pulled a fib off this level and you're looking for an optimal trade entry, you wanted price to get back into a discount, that OTE lines up with that order block and that fair value gap. So if you really want the dollar to remain bullish, then maybe today we get a little consolidation. We have some red folder news tomorrow that maybe pops us down into that volume imbalance, gets us back into a discount, and then we run up Wednesday, Thursday, and Friday up higher again, displacing above this high. So you definitely, you have relative equal highs up here again also. So I don't think that this weekly fair value gap is going to hold us down. I think that the dollar is going to just continue to rally. So the low of the week may already be in. So if we drop down to the 4 hour here on our daily, this is our daily OTE right here. We've dug into this order block right here on the 4 hour time frame. This was the Asian session, the London session, and the combination of both. So you can see we could come down a little bit, reach into a discount before we go back up, but it is respecting bullish order flow this entire trend. So higher high, higher low, higher high, higher low. We've displaced above, higher high, low, displaced above, higher high, low. So the question is are we going to kind of do what we did right here, where we kind of base, make that low, and then go up? Price to me can wick down into this area, grab some of this sell side liquidity that retail is going to see on a trend line. But I don't think the dollar is just going to collapse down, way back down into these levels right away. I think we're gonna run up into that higher time frame OTE, and let me again show you some more. I guess confirmations in my mind of why we might be heading that way. If you look on the daily time frame here, I see a beautiful bearish breaker on the daily time frame. So these two down candles are the last down candles that pushed us higher to take out old highs. And after we took out those old highs, we had immediate rejection and displacement below. Price did not respect this as an order block, and it broke through, and this now becomes a breaker block. It displaced below, left a fair value gap inside of it, reached back up into that fair value gap, and then displaced below again. And so this breaker and this OTE and this imbalance on the daily and the imbalance on the weekly all leads me to believe, and with these relative equal highs up here from last week, it leads me to believe that we're not going to take out last week's low. We're more likely to take out last week's high and reach up into some of these levels. And so that's kind of what I'm anticipating. There is, that imbalance, and then here's your other daily imbalance up here that I think we're going to reach into this week. The question is today, what happens? Do we just kind of, consolidate around? We engineer some liquidity for our red folder news tomorrow that we then use to start our run up into this. So here was our low last week. This was Monday. We said, hey, we're going to get the low on Tuesday. Could be similar this week, where Monday just kind of does this, and then Tuesday we get a dip into that daily volume imbalance and into that 4-hour order block. Again, that daily volume imbalance is right here around the 102.9 level. So it's about right here, just under there. And there's liquidity here, there's liquidity here. So perhaps today we grab that and start moving, but don't know. We're just going to kind of wait and see. We could move up Tuesday, grab Monday's low so that we can run higher, wherever that might be. But currently, we're just in a consolidation. We're moving sideways from Sunday's open, Asian, London. We haven't taken out either of those yet. So I definitely would want to see price get out of this consolidation, perhaps reach, break, and then if we get displacement up on one side or the other, we could maybe find a 1 to 2 on the 15-minute or 5-minute time frame there. So that's kind of where I'm looking at on the dollar. So if I'm anticipating that on a dollar, again, if the dollar is anticipated to be bullish, then foreigns are anticipated to be bearish. And so I don't think we're going to take out last week's high. I think we're more likely to take out last week's low because we now have relative equal lows under here. And there's still some downside on this leg. You would want to see price reach into a discount on this weekly time frame, a little deeper discount before we try to dig into that weekly imbalance above us. So on the daily, Friday was a big reversal day on the pound, but we now have relative equal lows down here. This is still our downside target, and I think we'll get there this week bare minimum. It could reach lower into some of these areas here. There's no imbalance above except way up here from a couple weeks ago. Excuse me, sorry. So Monday we have an open. We gapped a small gap down, and then we've been rallying overnight on the pound. Coming up into this daily order block right here. So now that we've had a change of structure on the daily time frame, we've taken out that low and that low. We've closed below. We're moving back up into this daily order block. We're moving back up into this 4-hour order block. These two blue candles right there are a 4-hour order block together. We've reached up into it. This is the 1-hour breaker, 30-minute breaker, sorry, from our trade from last week. That we have failed to close back above. So we're just still moving sideways here. I could see the pound coming up and digging up into these areas up here a little bit, maybe clearing out some of this buy side liquidity. You do have a trend line right here that retail is going to see as, you know, and when there's retail involved in what they see, then we're looking at them as being their liquidity. So if they're thinking that trend line is going to hold, they're going to get it in. Where's their stop going to be? Somewhere up there. So you could anticipate price being bullish today, but we're still just kind of moving sideways. There's nothing attractive to me at all. I'm going to want to see a clear liquidity run and then a move in the opposite direction with displacement, creating a breaker with hopefully a fair value gap that we can use to target an entry on. Like we did here, here, and here, 3 in a row, winners. Don't get used to the 3 in a rows, by the way. We're going to take a loss. And I'm not asking you to trade along with me. I'm showing you how this can be done. If you just take high probability setups, that you're patient, you take fewer trades, you wait for the gold nuggets just to like scream at you, here I am, and then you take those and you capitalize on them. And that's how we're going to pass these challenges and get funded and get some payouts, hopefully. That's the plan. All right, so we're just going to kind of watch and wait. Let's jump over to the euro here on the weekly. We accomplished our downside objective last week on the euro, and if you're looking at OTEs, you have gotten into a discount area. You did not reach your OTE. there's not as much on this chart like we see on the dollar, like the breaker and the OTEs all lining up. Like there's not fair value gaps down here that I would specifically target on the weekly time frame. Other than that, if the dollar's going to make a deeper run, then we can anticipate the euro also making a little bit of a deeper dig back down into here if it wants to go higher and continue this bullish structure on the weekly time frame. This is weeks. Every candle is a week. That's how long it takes these candles to print an entire week. So if we're going to remain bullish on the weekly time frame, I think we're going to need to come down a little bit further on the euro here. On the daily, what do we see? We do see some now imbalances underneath the OTE area. This imbalance was traded into, but we haven't had any like clean reprice and rebalancing where you've seen bodies close back below this area. You have another one down here that's deeper. So yeah, you know, all of these blue candles ran sell side liquidity and then got displaced above. So this technically is a daily breaker. You have a big volume imbalance. It's already been traded through both ways. This volume imbalance has not. So again, this all lines up with saying we could potentially see the euro take a bite out of it. So we have taken out Friday's high. So our high right here, this is our high. When I hover over it, 1.08284, and the high today is 293. So we just reached above Friday's high. We had a gap open. So there is a volume imbalance under here, which is another reason why you could potentially see price want to start moving back down in the euro direction. We look on the 4 hour. We got a lot of relative equal highs here and here. You do have a volume, a 4 hour order block that we haven't reached into, and you have some fair value gaps here. So you could, like I said, with the dollar, you could see a euro push up, grab some liquidity, test that order block, and then start falling away into some of these lower levels back down here. But right now, it's doing the same thing, just moving around sideways. So I'm going to want to see a very strong and clear, convincing liquidity grab, and then I want to see a break of structure to the opposite side with displacement with a fair value gap, leaving behind a fair value gap inside of a breaker. That's my bread and butter setup. Those are the A+ setups I'm looking for. So we'll see if we get anything. I'm going to show you US30, but I have again, we're just inside this yucky little range here. We're still inside this dealing range, and until we break out of this, look, these two candles right here, until we get outside of that, we've had 1, 2, 3, 4, 5, 6, 7, 8, 10 days inside this dealing range. We haven't tested the buy side. We haven't tested the sell side. So it's just not worth looking at. Like, that's just until we get it into a trend and price starts showing it's where it wants to go, I have no desire to trade this whatsoever. US30, my recommendation is stay away from it. The euro and pound are trending. The dollar is starting to trend, so focus there, man. Low-hanging fruit. Go for the low-hanging fruit. So we're just going to watch and wait, and we'll see if we get any kind of setups going on here. I can stay on at least another hour. At least another hour I can stay on. We drum down to the 1 hour. You can see we're starting to get a push up back into this 30-minute breaker. We've respected everything. Respected all of it so far. This is the 1 hour order block that it has not closed above. We're inside this range. So until we close above that, like with strong displacement, and this 4 hour order block up here gets tested again. Again, I just want to see. I want to see that price is wanting to grab liquidity. So for instance, if we talk through what happened since the markets opened last night, Sunday night. We opened, went up, we've come down in London, and then we've pulled back. Here's your Asian session high up here, and here is your high from Friday up here. Euro's already taken its high out. Pound did not. Dollar did not. Dollar has also taken out its low and moved back up. But pound hasn't done that yet. So for me to want to be interested in shorting pound dollar today, I'm going to want to see a spike up. And maybe this candle right here, this down candle, gets you up to take out Friday's high, and then we get displacement back down. Maybe not. It's just now 7:30. The markets on Mondays often are a little lackadaisical. Excuse me. There's that tiredness I was telling you about. Get some coffee. So not much happening here. We can read some headlines because they're just fun to read. For the pound dollar, headlines 9 minutes ago from Reuters. Dollar steady as debt ceiling talks to resume. Debt ceiling talks, back and forth, man. Even last week you saw every other day. One day it would say dollar strong over debt ceiling talks, and the next day it would be dollar weak over debt ceiling talks. Headlines mean nothing. The market moves from liquidity to liquidity. It engineers liquidity, and then it grabs it, and then it goes in the opposite direction. And so we're just trying to look for the clues that it's dropping along the way so that we can get involved and grab that low-hanging fruit just real quick. Just reach up and grab it and get out. That's all we're trying to do. 40 minutes ago on the Dow Jones Newswires, UK inflation data this week are key for sterling. Yep, and we've got red folder news all week, I think, across all these currencies. Sterling steady as the US debt ceiling keeps traders on edge. So all of that is basically language that is just describing a consolidating market. When it's steady, it's not strong, it's not weak. That means it's just holding ground, and that means we're in a range. And I don't like trading ranges. You can trade ranges. Basically, if you were to draw a box around your range and say, like, here's my box. Here is the top 75%. Here's the bottom 75%. When it gets up to the top 75% of the range, you look for a lower time frame entry to go short and target the bottom 75% of the range. That's a very basic consolidation strategy. I don't have the data. I don't like trading them because you get wicks up and out and around, and you don't get good RR. They often will just go back to the 50% of the range, and you're done. And I just don't enjoy it. It's not fun. So we just wait. They're not high probability setups. Relative equal highs on the buy side on Euro. We've already taken out some sell side. We've attacked sell side and moved up, but we have yet to take out buy side liquidity. Euro is going to be similar. Stocks trade cautiously ahead of U.S. debt talks. Euro dollar. Dollar snaps 3-day gain after Powell hints at Fed rate hike pause. So when he paused when Powell spoke last week, he said maybe we don't hike anymore. And everyone took that as a opportunity for the dollar to fall off its like 7-week highs or whatever it was. What's up, Corey? Welcome into the stream, buddy. How was your weekend, man? So yeah, we're just watching and waiting. We're just chilling out on Monday and seeing if we get anything popping. We would want to see. I don't really know what I want to see right now, and I'm not super inclined to try to get into a position today, but if I see liquidity taken and I see a displacement below after that liquidity grab, we'll get in. My weekend was nice, man. We just laid out by the pool, my wife and I. Got a little sunburned. What else did I do this weekend? I figured out how to make YouTube shorts. I put my first 3 YouTube shorts up on my channel. So that was kind of cool. I'm going to try and start doing those as kind of daily recaps, or if something interesting happens, kind of recapping the day and putting those out there. And but other than that, man, I absolutely really did nothing. It was so chill, and that's what everybody needs. You don't need to sit around and look at charts all weekend. People are like, oh, get on and backtest all weekend. If you're actively trading during the week, you don't need to do that. And I mean, unless maybe you had a really crappy week trading, and I can see why you might want to do them. How's your challenge going? Where are you sitting at on that right now? So kind of, if I'm looking at Euro here right now, one of the things I'm looking at as a potential target for a liquidity draw, you have relative equal highs right here. Just going to pull this line out. So you've got relative equal highs right here. So that's buy side liquidity. You have a fair value gap here and here inside of this 1 hour order block here. You also have relative equal highs up here with another imbalance, another order block. So I feel like you're engineering liquidity here so that you can reach up, grab some liquidity, rebalance some of this, get into this order block before we go lower. And that may be tomorrow. That may not be today. We may We may just see this all day long. Just kind of an expanding, what does ICT call it? He calls it a seek and destroy. That's it. My brain isn't working super fast right now. He calls it seek and destroy. So you're just kind of grabbing this side, grabbing that side, and you're just engineering liquidity, kind of expanding before you get the move and maybe this news over here tomorrow or on Wednesday gets this thing rallying around and out of that. But right now, that's about all we see. So up 2%. Haven't tried taking anything lately. I didn't trade Friday. Yeah, I looked Friday and we actually had a setup, but we ended up canceling that order because it hit our profit target before it came up to trigger us in. And so we canceled the order Friday. We didn't take anything on Friday either. We're still sitting at 10,000 for phase 2. But man, you're up 2%. That's awesome. That's something to be very happy about. Do you have a time limit on the firm that you're using? Are you with Smart Prop Trader? I can't remember. You and Muhammad were both doing one, and I can't remember who you guys were using. I think they were different, but hopefully you're on one with no time limit. But Smart Prop Trader, cool. A 100-day. Oh yeah, that's right. I remember you telling me about that 100-day thing with Smart Prop Trader. So it basically is. If it basically feels like a no time limit. 100 days. My God. If there's 20 trading days in a month, that's 5 months. So it's basically no time limit. Hey man, we got somebody new in the chat. Welcome. Is it possible to join the Discord for deeper learning? Gav. Gav, currently the Discord is not open. We're just focusing everything that I would be doing there, I'm doing right here. And doing it for free, doing it for, you know, just a documentation for all of these traders out there that are having problems passing challenges, or maybe you're new and you haven't even taken your first challenge, and just showing you that, man, you only need to buy a 10K account. You could buy it, spend $100, buy a 10K account. Show you how to pass that in a reasonable amount of time with really very few trades needed. Get funded and then start snowballing that. And I'm just doing it all right here. I'm here every day, Monday through Friday. So this is better than Discord. You can follow here, be here every day, watch. I would also tell you to follow my Twitter account at Venator Trading on Twitter, because when I'm not streaming here, I'm posting. If I see a setup off stream, I will post it on my Twitter, and I will give you specific exactly where I'm getting in, where my stop loss is, where my take profit is. I'll give you screenshots. So there's no need for a Discord right now, and I plan on doing this through the rest of this year, at least until I can reach 2 million. My goal is to hit 2 million funding by the end of this year. If that happens sooner, then maybe we don't do this channel anymore and we just go back over to Discord, but we'll wait and see. So Well, I'm glad you're here, man. Hope you stick around and learn something. Are you currently, Gav, are you currently in a challenge, or you, what are you doing with your trading right now? Where are you at with all of your trading stuff? And feel free to pop in and ask any questions over there in the chat. I do try to keep up with those as much as I can. What I was saying here about the euro dollar right now is we're just on the 1 hour, we're just in a consolidation. It's Monday. This is what happens on Mondays. You have your opening day gap from Friday's close to Sunday's open. Ran up. Excuse me. Ran up. Took out, barely just took out Friday's hot by like just a pip or two. Came back down, filled in that gap, reached in and closed in this imbalance from Friday. And since we came back up to today's high, failed to make a new high, and now we're just hanging out sideways. This is typically Mondays, and we're not going to force a trade. We're not just going to be like, oh, well, we'll trade the range. No, I do not trade ranges. Do not trade ranges. It just makes no sense. It's not a high probability setup. Don't take it. Let's see what else I got going on over here. Gav says no challenge, just trading spot Forex, but wanting to get into a challenge soon. A few years off, just getting back into it. Cool, man. Well, welcome back to the game, man. This is kind of one of those careers, businesses, hobbies, side hustles that when it gets in you, it's in you and it never goes away. Do you take breaks? Yeah. Do you need to step away? Probably, but it's there. And once you see it, you can't unsee it. Once you feel it, you can't unfeel it. And it gets inside of you, and you're either a trader or you're not. And you're in this constant struggle of becoming a consistently profitable trader. And that's where to me, that's what I love about this thing, man. Spot Forex. So here is why I am all team prop firm. I've done spot Forex before. I've had money in brokerages, and I was never able to make enough money consistently to compound it over time to get to a place where it could actually change my life. It could free me from a 9-to-5, whatever you want to call it. Like, you're starting with such a small amount. And I think I put up a Twitter the other day. I would have to go dig through my Twitter feed, but it was basically saying if you started with $1,000 account in a brokerage and you're trading and you're actually have good risk management where you're only risking 1 to 2% of your account per trade, and then you'd never touch any of your profits, and you're just trying to compound growth. It would take you 25 years. It would take you forever with a 50% win rate, 1 to 2. You're only taking A+ setups. Like, it would take you so long just to get it to 50K. And then at 50K, let's say you could make 5% a month. That's $2,500, but it's taken you over a decade to get there. Of never touching your money, only taking A+ setups where you're only taking maybe 10 to 15 trades a month. On a good month, maybe 15 trades. We passed ours in 5 trades, but we traded for 7 trading days, so almost 2 weeks worth of trading, and we only took 5 trades. We only lost one break even, and then 3 straight winners. So that's why prop firms are the way to go. There has never been more money available to traders who have a good trading strategy, strong self-discipline, and consistently profitable. If you are that, if you are consistently profitable, you have a good trading strategy, and you have excellent self-discipline and kind of self-emotional management inside of you, good psychology, there's no reason for you not to have 7 figures in funding from these prop firms. That's life-changing money. They're going to give you 80% profit split on the money you make. And you have $1 million in bespoke funding, who I'm using this challenge with. You have $1 million, $2 million to trade with, and you make 5% on that. 20K is 1%. 1% is 20K on a $2 million account. You make 5, that's 100K. You get to keep 80, that's $80,000 on 5%. That's $1 million a year. Well, almost, not quite. I mean, for anybody that's never made $1 million a year, it's as close as you need to say that's $1 million a year. I've never made $1 million a year. Maybe this is the year. We'll see. Don't know enough about prop firm trading yet. Very interested, but I'm concerned as a lot of people talking about lack of payouts. I don't know who that is, because all of the best prop firms are extremely transparent. They have extremely active discords, and they post their payouts daily, and they have thousands of traders that are verifying their payouts inside of them. Are there shady ones? Absolutely. Don't use them. I would try to find a prop firm. And so if I was smart right now and I was interested in trying to make money off of all of you, I would have affiliate links for all of these prop firms I'm about to mention, but I don't. I do have an affiliate link for Bespoke Funding. If you want to use Bespoke Funding, who I'm using to do this challenge with, you can find that somewhere in my bio or on my banner or wherever. I don't even know how that works. I'm still trying to learn how to do all this. I've just been focusing on trading, and this is all kind of new for me. But no time limit firm. You want to try to find a term that does not have a time limit in which you need to reach your profit target. Prop firms that have time limits, and that was until recently. Hold on, guys. All right. Until recently, prop firms, their way that their main model was a 2-step challenge, meaning you pay money. Let's say you take a 10K like I'm doing right now. Let's say you take $100 and you buy a 10K classic challenge. That's what a lot of them call it, classic challenge. So it's a 2-step process. Step 1 is you have to reach a certain profit target within a certain number of days without violating their daily drawdown limit or the overall account drawdown limit. So when prop firms first came out, FTMO was probably the mother of all prop firms for years. They're kind of being superseded now by several up-and-comers that are really changing the game and drawing a lot of interest from prop firm traders. So let's go back. FTMO, their classic challenge that they kind of instituted was you had to reach 10% profit in 30 days. That was step 1. You could not have more than 5% drawdown in any one day, and you could not have more than 10% drawdown on the overall account. So if you could get 10% profit in 30 days or less, then you would move on to they would call that the evaluation. And then they would call step 2 the verification, meaning we are evaluating your trading skills in step 1, and then we're going to verify them in step 2. And in step 2, you have 60 days to make a 5% profit target with the same drawdown rules of no daily drawdown of 5% or less, or no more than 5%, and then no more overall account drawdown of 10%. And so other prop firms started coming into the space, my FOREX funds, for instance, and they were like, hey, we can make this more attractive. We're going to keep the time limit, but we're going to increase your overall drawdown, and we're going to reduce your overall profit target. And so my FOREX funds came in, and they said, we're going to give you 12% account drawdown, 12%, and we're going to increase your daily drawdown by 6%. Cool. So we have more drawdown to play with. Oh, also, you only have to get 8% profit instead of 10, and you still have to do 5% on the verification phase in step 2. And so people rushed over there. They're like, oh man, better drawdown limits and lower profit targets. So, but it was still all within 30 days. And then other firms started coming in, like the funded trader program. I love the funded trader program. They were the ones that really kind of changed the game on their active Discord. They're all inside their Discord. They have millions and millions of dollars of verified payouts. But they still did. They introduced various kinds of challenges, and so they were kind of the newest up and comer. FTMO, my FOREX funds, the funded trader, all of these have time limits. And there's others like Funded Next, True FOREX funds, also time limits. Then earlier this year, in 2023, I think they started in 2022, but my Funded FX, probably one of the fastest growing prop firms in the space right now. They have over 50,000 people following them on Twitter and in their Discord. They have millions of dollars of payouts already this year that are verified. They introduced no time limit trading, meaning you don't have to hit your profit target within a set amount of time, 30 days. That's a game changer. That's a complete game changer for the industry, because these prop firms are making money by having traders fail the challenges. It's not that they want them to fail. It's just that the way they have it set up induces more failing than passing. And I think before the no time limit firms, it was around 3% of people who took a challenge would pass. And that's because when you have a time limit on you and you have the pressure to hit 8% or 10% in a month, that is a massive number. Most people cannot consistently hit 8 to 10% profit every single month. If you're taking only A+ setups and you have a good risk management structure, it's not that you can't, it's just that most don't. And so it induces a gambling mindset. You're more likely to over leverage, you're more likely to increase your risk, you're more likely to take less than A+ setups because you have a deadline to hit. You have a deadline to make money, a certain amount of money on. And that's just not a healthy environment for traders to trade in. And so they introduced the no time limit challenges. And now several of the new companies, Funded Engineer, Bespoke Funding, I'm sure there's others, they all have no time limit challenges now. You have to hit 8%. Their drawdown is a little bit less. Its overall account drawdown is 8 instead of 10 or 12. But you have an unlimited amount of time to make 8%. And so if you're only taking A+ setups, so for me, I'm only taking A+ setups. That means I could watch the charts all week long. And if I don't see my A+ setup, I don't take a trade. And if I was in a funded challenge, if I was in a challenge with a firm that has time limits, and a whole week goes by, I just lost 5 days of trading opportunities out of the 20 that I have in that month. So now I only have 15 days to try to make 10%. You see what I'm saying? So it starts weighing on your mind when you know you have the deadline. So find a firm that has a no time limit challenge. You know, if you haven't ever taken a challenge before, I would definitely say get the cheapest one, just so you can know that there's money, you have skin in the game and there's money on the line, but you can kind of get used to how that feels. And if you pass it, great. If you don't, you're only out a small amount of money. A lot of these newer firms have like 5K accounts. I mean, you can get them for like 30 or 40 bucks, some even cheaper than that. And what a return on investment if you can spend $30 or $40, pass a challenge, and then you're managing a $5,000 account in which you get 80% of the profits. Oh, and on your profit split, they'll refund you that challenge fee as well. So this is the golden age of prop firms. It really is. There's never been an opportunity to make the kind of money and returns as a day trader than there is right now at your fingertips. And if you're not pursuing max funding with these prop firms, you are missing out. Absolutely missing out. And I'm sitting here, I'm watching the charts. There's nothing going on. There's nothing happening. We're just in this consolidation. Nothing is going on until we see a liquidity grab, either on the buy side liquidity that we have marked up here on the euro into this 1 hour order block, and then we see displacement down. We have no interest in anything that's going on. Same with the pound. Until we see some buy side liquidity run up into here, you do have this 1 hour order block right up in here and some fair value gaps. It's already been mostly closed out, but until I see something else happening here, there's nothing going on. There's nothing. There are no trades developing or happening. So this is the part of trading that newbie traders, Gav, that are just coming back. This is the part that they can't stand. They're like, oh, I'm going to jump in today and I'm going to take a trade. Don't do it. Only take A+ setups. Now, if you see an A+ setup, if you're not trading the system that I'm trading, then take it. If your system says, hey, there's an A+ setup developing right down here on the 5-minute time frame, then you should take it. Here's why I don't trade ranges, because if you're trading on the 5-minute time frame right now and you saw this run up, you saw this displacement up and then displacement down, and you saw this break of structure with this fair value gap, and you entered right here thinking we were going to target these lows, we're in a range. And when you're in a range on these lower time frames, all these trades look so appealing, but you have to be aware of what's happening on the higher time frames. It's just ranging. It's just going to chop you up. Don't get in it. In the meantime, just hang out and watch, and we can keep talking about it. Yeah, man. So Bespoke Funding is who I'm using. So far, so good. Everything's great. They are a newer firm, but they have been very transparent. They post all their payouts. Traders look at their Trustpilot reviews. Are excellent. MyFundedFX, also a great new company that I would recommend to you as a no time limit firm. Funded Engineer is also a new one. When I say new, I was like they're like just a few weeks new, but they've already had people pass and they're posting payouts. These firms that are in it to win it, they're not going to not pay you. They need to pay you out so that they can keep making money, because they need more traders. They want to attract more traders to their firm. The CEO for MyFundedFX, if you follow him on Twitter, his name's Matt. I can't remember what his Twitter handle is, but if you search MyFundedFX, I'm sure he'll pop up. Matt, MyFundedFX CEO or something like that. I can't remember. Dude's super transparent about how he runs his company and everything that goes on behind the scenes and how they make money. They do make money from challenges, of course, but they also book good traders and they reverse trade bad traders. It's a win-win. So once they've identified traders that are consistently profitable, they can turn on copy trading on those accounts, and they can, benefit from these good, consistent traders out there, and their master account can grow. And if they identify bad traders, let's say they have a trader who has taken 10 challenges, failed all 10 challenges. The next time that trader buys a challenge, they can reverse trade that trader. They can fade that bad trader, basically, and make money on the opposite side of that trader's positions. And they're not making that trader lose, and they're not trading against that trader. They're just saying, hey, this guy is always able to be on the wrong side of the market. So as soon as we know what side of the market he's on, we can take a position headed in the opposite direction, and we're going to be able to profit off of that. So that's so they make money on all of that, and they make enough to pay out their traders. They make enough. The good traders, if they're copying them, are paying for themselves, and if they're copy trading on top of that, plus the challenge fees, believe me, man, these prop firms are making a ton of money, and they want to keep growing. So it's in their best interest to keep those payouts coming. So until something happens otherwise, I'm going to pursue max funding. I already have a 6-figure funded account with the funded trader program. And I'm taking a couple other challenges with some other firms, but I'm only documenting this specific challenge. I'm starting with a 10K. I spent like after tax, it was like $112 or something. I don't remember, on this 10K challenge with bespoke funding, and gonna try and grow it to $2 million by the end of the year. They will allow you to purchase accounts up to totaling $2 million. A lot of these firms are maxed out at like 300K or 600K, and then they will scale you up if you are consistently profitable. So a lot of these firms have a scaling program where your maximum allocation, the maximum amount of accounts that you can have, are, let's say, $600,000 with the funded trader program. I believe right now it's $600,000. So once you've reached $600,000 in total account value, maybe you have 5 accounts, and between all 5 it equals $600,000. Maybe you have just 2 $300,000 accounts, whatever. After, I want to say, 3 months of profitability, let's say you trade with them for 3 months and you're able to keep those live accounts and you keep getting payouts. And I want to say you have to have like 5 or 6% cumulative over 3 months time. They will scale that $600,000 up by a certain percentage, 20%, 25%, whatever. And most of these prop firms have scaling programs that allow you to reach maximum allocation, and then after consistency, they'll keep bumping you up to a maximum of over 7 figures. Well, bespoke funding, they have, as far as I can find, they have the largest maximum allocation that you can get just by purchasing accounts. So you can have a total account value of $2 million on their classic 2-step challenge. They also have a 1-step challenge, different rules. It's a totally different kind of animal. I don't do 1-step challenges. I want to do 2-step because you have a larger drawdown percentage to work with on 2-step. It's a way lower and smaller drawdown percentage than on the 1-step. So technically you could get $4 million funding if you had $2 million max allocation in their one-step program and $2 million max allocation in their two-step program. Yeah, man, there's so much going on in the My Funded FX Discord. There are, I don't know, there's like 50,000 traders in there. Their mods are super active. The CEO is super active. They're always running promotions. That's the other thing about these prop firms. Every single prop firm is running promotions constantly. They're running discounts. They're running specials. So you can always get a pretty decent discount on most of these challenges off of their listed prices that you see online. Also, these prop firms, another thing I would recommend, and I do this every single month, these prop firms have free competitions that at the end of the month, the traders who can make the most profit on a competition account, they will receive free challenges. So instead of having to pay for a challenge, if over the course of a month you do a competition account, you can, and you're one of the top leaders at the end of the month, you can win free challenges on top of that. So they're actually providing ways for people to get free challenges just by doing this competition. And I like having the competition accounts because it gives me a chance to test out other trading systems that I might be developing. It's kind of a nice degen trading. So a degenerate is someone who is like a gambler. And so you hear guys say, I'm a degen trader. And on these competition accounts, there's nothing at stake. There's no money in it. If you get lucky, which is how most of the leaders actually win these accounts, because if you go on their competition leaderboards and you look, the leaders are at like 90%, 80% profit growth in a month. And they put lot size limits on these competition accounts. You can only trade a maximum of 5 lots on a 100K paper trading competition account. And so it's just somebody got lucky early in the month or at some point in the month, put a 5 lot on, let's say, US30, caught the big drop on US30, and they make 50% of their account on one trade. It's not like they would do that in a live funding environment. It's just a competition account. It truly is monopoly money. There's nothing happening. But when you have a challenge going on and you're only going to take 2 trades a week, maybe, having those competition accounts that you can go and just play with, and it's fun to see your name on the leaderboard and if you can get up or down on it. And all of the firms have them, so you could have 4 or 5 competition accounts all running. And while you're waiting for your actual funded challenge account, like we have here, for a setup to appear, those competition accounts are nice to just kind of keep on the side there. So find them, sign up with them. Yeah, the June competition. I have failed the My Funded FX May competition. I got it up to like 22%. And then last week I forgot to put in a stop loss. I put a 5 lot on US30. US30 on a 5 lot can give you the largest amount of growth compared to a 5 lot on euro or pound or these other, like even the gold, whatever. A 5 lot on US30, most of these guys, if you look at their accounts on these competition leaderboards, they're trading US30 because small moves on a 5 lot can give you a lot of percentage growth. But you have to be really careful on where your stop loss is. And I just forgot. I just put in a 5 lot. I didn't even put in a stop loss. And like I opened up and I had gotten it up to like 22%, which wasn't even in the top 50. I don't even think it was in the top 100. And I lost it. I just forgot to put my stop loss in. I didn't pay attention and opened it up later that day. I forgot. I was like, oh, I need to go look and see what that US30 trade did. Opened it up. It violated the 5% daily drawdown limit. And so that account was lost. And I didn't do one for the funded trader or any others. But in June, I'm going to sign up. I think they have signups going on right now. So Smart Pop, My Funded FX, Bespoke, the Funded Trader, all of them. Get a competition account. They're fun to play with. It's not that you're going to really develop good trading habits with them, but again, if you just have that degen trader itch that you've got to scratch while you're waiting for A+ setups, it costs you nothing. And if you get lucky, you can get free challenges out of it. So I do. Oh yeah, those Discord channels, man, they blow up in there. Always turn notifications off. It's something that you want to be able to go in at your convenience and scroll through. Yeah. Turn off the notifications. Do not disturb. That is the way to go on any group chat. That's the way to go on any group chat. All right, so we're about an hour and 15 minutes in. I'm going to stay on until the 8:30 New York indices market open and see if there's any kind of reaction at 8:30. And if there is, maybe we get a nice little liquidity grab. But this is looking like it's going to be your typical kind of lackadaisical Monday happening here. Cool, 5 viewers today, man. Welcome, everybody. Say hi in the chat. Like. It does help the channel. Every channel starts with 0 viewers, and we just started this channel. And I imagine as we grow it and begin to show receipts and gain some credibility here, we'll get some more viewers. So you guys are some of the first ones in here. So cool, Gav. Catch you later, man. Come back. I'll be here every Monday through Friday, 7 a.m. Eastern. I also have a 9 to 5 that I'm still doing. That's why I've got to get off here in about 30 minutes or so and go get ready for my day as well. So I won't be on much longer. You're not going to miss much. So come back tomorrow. And any other traders in here, man, pop in the chat. Say, click that like button and subscribe. It will help the channel grow and get some more people in here watching and following along. But yeah, we've got basically nothing happening. A whole big fat lot of nothing. We're just engineering liquidity. That's all we're doing. Monday is engineering liquidity. So not much happening. Yep, pretty boring morning. I mean, you can see exactly where they're going to want to reach into and grab stuff. You got a 4-hour order block. You've got your relative equal highs. You've got some fair value gaps to close in up here on the euro. So we know what we're waiting for. It's just, when will it happen? I don't know. We might get some movement here at the market open here in about 12 minutes or so. So we'll, like I said, we'll hang out, see if we get any kind of Judas swing, false break that tests this 4-hour/1 hour order block with some imbalances above and relative equal highs here before we attack some of the sell side. Corey, have I ever asked you what's your trading style like? Do you have a model? Do you have like are you a support and resistance guy? I can't remember if you said that already last week. I need to work on a new music playlist. I mean, this is a cool vibe. But Not, I don't know. We've been listening to it for 90 days in a row now, so maybe I'll work something up this afternoon. For tomorrow, we can get a new playlist going. Not much going on, man. Order blocks and fair value gaps. Yep. Same, bro. Silver bullet. I've heard a bunch about that recently. Here's the thing. With ICT Concepts, that dude puts out a new name for something, some concept, some idea every month. That's why I tried to keep up with all of his concepts. I tried to early on incorporate all of the stuff that he teaches. And it's just too much. Like, maybe he has the brain capacity to keep all of that happening inside of his head at once while he's looking at a chart like this. Oh, we're in a market maker sell model on the 15, and we're in a OTE on the 4 hour, and we're in a INWOG retracement of the new day opening gap of 2 weeks ago, and we're in a one shot, one kill time zone. I mean, it's just so much that it's going to confuse you more than it's going to help you. And I'm not saying don't go learn it. Go learn it. If it interests you, go learn it. It may be the thing that clicks with you that's like, this is my setup. But that's what my point is you have to find your setup. You have to find your system. And the simpler it is, the easier it is to understand, the more likely you're going to be able to find profitability with it over a long course, a long set of trades. And that's what you've got to have. So whether it's a silver bullet, I just stick with order blocks. I just stick with fair value gaps. I stick with breaker blocks. Those are my concepts. I want to see price respect the order flow. So if we're in a downtrend like we are right now, how do we know we're in a downtrend? Because price is moving from the upper left to the lower right of your screen. You're in a downtrend, okay? I want to see price respect bearish order flow. What does that mean? It means it will respect fair value gaps and order blocks and breaker blocks as we move down. So you can see price comes up, it respects this fair value gap, this order block, it grabs liquidity, it makes a new low, it comes back up into fair value gaps and order blocks, and it keeps respecting them as we move down. So we're inside this current dealing range, but we're in a bearish order flow. That's why we're still bearish. So we're expecting price to grab some buy side liquidity, displace lower, leave behind a fair value gap and a breaker block that then we can use as our A+ setup. That's it. It's so simple. That's all I look for. I don't care about any of the other concepts he has. They work. They definitely work, but it's just too much to be like, oh, today I'm going to look for this. Or today I see that. And today I see this. And today I'm going to put this on my chart. You're never going to find consistency. So I'm not here to teach ICT concepts. I'm here to show you this is how I identify A+ setups. This is how I manage challenges and risk inside of challenges. And this is how I grow challenges to larger funding. But I'll use his concepts. I actually tweeted him out yesterday. Maybe he'll pop in here and we'll get suddenly flooded with 3,000 viewers. Getting a run up here as we enter the 8:30 New York open time. See if we'll get a liquidity grab up here. I don't just sell at liquidity grabs. I want to wait. If we get a liquidity grab here, then we'll want to see confirmation that price does indeed want to shift structure here to the downside. If we get this liquidity grab right here, we get a strong displacement up in here, and then we get a break back down, we might get a trade set up today. What's happening here? Gold making a run. Gold aggressive and dollar is not. Interesting. Gold has just grabbed all of this sell side liquidity on the daily. Thursday, Friday was a retrace back into the range. You have a large fair value gap up here, daily order block up here. This would be a daily breaker. This candle, this down candle that had this massive run up, grabbed liquidity, a big run down. We've broken through it. This is a daily breaker block right here. There's a fair value gap right here. So I would expect if price is going to collapse, it's gonna collapse somewhere inside of where it is currently. You can see this was the liquidity grab. We've come back in. Be looking for something up in here potentially. Running pretty hard right there. Pound is not running up. Euro is. Dollar is kind of not doing much. So this would be interesting if on the 1 hour you see this down here. If you look at the euro, it's way smoother. If euro runs this high and the dollar does not run this low, that would be SMT, smart money tool, smart money technique, where correlated pairs, the dollar and the euro dollar, if one of them is making, so if the euro is going to make a higher high and the dollar fails to make the same lower low, that would mean the euro is grabbing liquidity, the dollar didn't need to, and now it can just run up. So potentially something like that in play. Couple minutes, about 30 seconds here before we get that 8:30 market open on the indices. So I don't know, we'll wait around for another maybe 15 minutes. If we get a pop up in the first 15 minutes, maybe we'll stick around a little longer. We'll see. All right, we're inside the market open. Not much reaction here. So looks like day 9 is gonna be just very quiet, consolidating session. Nothing is moving. Nothing's moving. We're getting no... There's just no life on any of this right now. That's fine. Just a quiet day at the beach, watching the waves roll in. It's very calm out there. Nothing brewing. So, no reason to sit here and keep staring at the charts. This is all you need, about an hour and a half to 2 hours a day at the charts, and then you need to get on about your day and go do what you need to do. So, that's what I'm going to do. That's what I hope you'll do. Don't sit here and stare. You'll start seeing stuff that isn't there. We will come back tomorrow. We have news the rest of the week, so there'll be some opportunities for volatility to come in. We'll let Monday finish playing out and see what kind of liquidity this all engineers and sets us up for the rest of the week. So I'm going to call it for now. So hope you guys enjoy the rest of your Monday. Stay safe out there, and we'll see you back again tomorrow morning, 6 a.m. Y'all have a good one.